What if Jerome Powell gets fired? The shocking ripple effect on real estate and multifamily investing. I'm Rich Santos, managing partner of Wardroom Capital Group. In my previous career, I hunted bad guys. Now I hunt high-yield real estate deals. What if Jerome Powell gets fired? And there are rumors. Would the housing market explode or collapse? Jerome Powell, the man, the myth, the interest rate villain, the hero, depends who you ask. He's the chair of the Federal Reserve and arguably the most powerful person in the global economy. But what if tomorrow he's out? Let's break down what that means for real estate, and especially multifamily real estate and real estate investors. Who is Jerome Powell and why does he matter? Powell leads the Federal Reserve, which controls interest rates, fights inflation, and basically pulls the economic strings behind the curtain. When he raises rates, borrowing gets more expensive. When he cuts rates, credit flows and the markets boom. So yeah, if Powell gets fired, markets will react fast. And here are three things that are almost certain to happen immediately. Number one, bond markets will panic and the Fed's credibility will come into question and yields will spike or drop unpredictably. Number two, Wall Street will freak out. Investors hate uncertainty and stocks will get volatile. So will mortgage-backed securities. Number three, interest rates are going to wobble. Lenders will pause, borrowers will hesitate, and deals will stall. That all trickles down really fast into real estate, and here's the impact on the real estate market we're forecasting. If the new Fed chair is a dove, someone who favors lower interest rates, you might see mortgage rates drop, demand spike, cap rates compress, and property values rise. But if the replacement is more hawkish than Powell, here's what you can expect. Higher borrowing costs, less liquidity, falling valuations, and a frozen transaction market. Here's the impact on multifamily real estate. Multifamily investors, listen close. If rates drop after Powell is replaced, here's your play. Lock in long-term debt fast. Refi existing deals and capitalize on improving cap rates. But if the market thinks inflation is out of control or the Fed loses credibility, vacancies will increase, operating costs will rise, and equity will dry up. You better have cash reserves and operational discipline because the easy money days will be gone. Here are some final thoughts on why this matters. Whether you love or hate Powell, the truth is stability at the Fed equals stability in real estate. If Powell gets fired, the Fed's direction could change overnight and your portfolio could feel it immediately. So don't just watch interest rates, watch who's holding the pen that moves them. So what do you do now? Do you want to stay ahead of every economic twist and protect your real estate investments? Follow, like, and share this video. And if you want to talk about double-digit tax-efficient returns backed by real estates, message me.